Thank you, Mr. Chair. I get a little concerned about what I call style drift, where government starts to do things that it's not necessarily within its core business. And so I just want to make sure that what we're doing will make sense because we're not a foundation and we're not a mortgage company. And we actually don't even have a low-wage workforce. We have pretty expensive benefits, so it gets real interesting when you want to do some cost analysis to see how this pencils out. So I am curious if I could ask Mr. Tim Schaefer a couple of questions if he's still on the line.
I am here, Senator. Thank you.
Yes, so you may, Senator Moorlach will ask you a question and you may answer.
Thank you, Mr. Chair. I will disclose that Mr. Schaefer is a former Orange County boy and a friend. So with that, Mr. Schaefer, borrowers are going to go look at this program probably because they have no equity in their property, or they don't, have maybe the credit rating score that would be encouraging. So my concern is a default rate. It would be awkward for the state to have to be involved in foreclosures. And so you're doing some work with originating lenders, but how are we going to make sure that we keep and maintain a very low default rate?
Thank you, Senator. I'll try and attack that by first laying just a tiny little bit of groundwork.
Could we increase the? Hold on 1 second. Could we increase the audio, or could you speak into the phone more closely?
Is that better, Senator?
No, you're very faint, and so I don't know if it's.
How is this? Is this any better?
That's much better.
Okay, thank you. Senator Moorlach, I'll try to answer your question this way. At the end of the Great Depression, home mortgages were often a very Byzantine, awkward structure. Frequently, they were what are called chained mortgages. A homeowner would borrow money for a period of 5 or 10 years and then would have some refinancing risk. Beginning in the 1950s, with the creation, I should say the expansion of the role of the Federal Housing Administration, mortgages became more standardized, and that's when the 30-year mortgage became more common. The result of that standardization was that single-family homes were much more easily financed. Underwriting criteria, to your point about creditworthiness and equity, could be incorporated into the underwriting criteria. Beginning in the 70s, when accessory dwelling units started to become more popular, that became more difficult for, again, the reasons that you've cited. Now, to answer your question specifically, the contemplated framework for this would not undermine standardized underwriting criteria. In other words, a property, in order to qualify for financing of an accessory dwelling unit, would still have to meet underwriting criteria of the private lender. Now, the problem is that it's a timing problem. The problem is that if I'm building an accessory dwelling unit on my home, it isn't rented yet. And since it's not rented yet, the underwriting criteria typically used in the market won't count the anticipated income from the accessory dwelling unit as part of my qualification measures. Similarly, if the unit is not yet constructed, it won't yet be adding value to my property to create appropriate loan-to-value ratios. The purpose of this program is to bridge that period. In other words, to encourage the private sector using normal underwriting criteria to protect the right of the homeowner to count the income from the rental, if any, and to count the equity. And during that interim period, to provide some support for that, much as the Federal Housing Administration did for mortgages after the Great Depression, in which led ultimately to the standardization of the 30-year mortgage as we know it today. And that perhaps is the ultimate goal of this legislation.
We're in a very, continue to be in a very low interest rate marketplace, and it says that the state will charge premiums, fees, and interest sufficient to cover the administrative costs of the program and the risk of defaults associated with the program. And so I'm wondering if your lending costs would be higher than what would be available in the private sector.
Mr. Schaefer, you may answer that question.
Thank you, Mr. Chairman. Certainly, Senator, I can't predict that kind of future. I will tell you that if the program is worthy, and the Treasurer believes it is worthy, that the competitive forces in the market will, we hope, produce the desired outcome and keep this program competitive with other programs operated by GSEs like Fannie Mae and Freddie Mac, for example. Since it is an interim period, we believe that the administrative costs of it should be representative of the market, since the lion's share of the qualification process and the packaging and the mortgages will in fact stay in the private sector.
Thank you, Mr. Schaefer. Thank you, Mr. Chair.